Florida insurance market is getting more complicated by the day. Hi, I'm Mark Capes with Statewide Insurance. I'm going to try to break it down for you and make it a little easier to understand. A homeowner's insurance policy can be confusing, so we're here to break it down for you. If you look at your declarations page, it'll list all the coverages that are included in your homeowner's insurance policy. The dwelling is the home itself and anything attached to the home. This would be a screen enclosure, a porch, garage, porches. All of those things would be covered under the dwelling portion of the insurance policy. Next on the list is other structures coverage. That's going to be anything that's not attached to the house. So fences, sheds, barns, workshops would all be covered under other structures coverage. Anything in those sheds are considered contents, the next coverage on your declarations page. Contents would be everything inside your house, your furniture, your clothes, your pots and pans, your appliances, all your electronics. Contents coverage covers everything inside the house and in any other structures that you have on the property. The liability coverage is an important part of the homeowner's insurance policy. This protects you if someone gets hurt on your property and they sue you. The liability coverage will pay for legal fees and anything that person's awarded for their lawsuit. The loss of use covers pays in the event that you have a claim and you can't stay in your house. The insurance policy will actually pay for you to stay somewhere else. It'll pay for restaurants if you have to go out to eat. It'll pay for your laundry if you have to have that done, which you would normally have done at your house, and other expenses that are involved with you staying away from your home. Another important factor to consider when you're looking at an insurance policy is actual cash value versus replacement costs. Most policies are written on a replacement cost basis, meaning they'll pay what it would take to replace the items in your home and replace your home. An actual cash value policy is a little different. It will depreciate all the items in your home, as well as depreciate the value of your house in the event of a claim. A couple of things to consider when purchasing a policy today. There are some companies that are limiting water damage claims. Now, water damage is going to be if a water pipe breaks, toilet overflows, water heater bursts, anything plumbing related. The insurance policy can limit your claim to $10,000. We've seen a lot of claims well in excess of $10,000, so you want to make sure you have that discussion with your insurance agent to make sure that there's no limitation or exclusion to a water damage claim. A roof can also be depreciated on some of these policies. What that means is the older your roof becomes, the less valuable it is. A lot of companies are aging roofs out at 15 to 20 years old, meaning if you have a claim on a 20-year-old roof, it could be paid nothing. The age of the home is also going to impact the premium. If a home's over 20 years old, it may require a special inspection, and there may be less companies willing to insure. Less than 20 years old, there's more companies available, and they'll also charge a lower premium. If a home is built before 2002, it's also a good idea to get a wind mitigation inspection. This can save as much as 40% on your insurance premiums. A block home is less expensive to insure than a frame home. You might also take a look at the roof. A hip roof, which comes down and meets the exterior walls on all four sides, is less expensive to insure than a gable roof with a V showing on the outside of the house. The fire department and fire hydrant can also make a difference in your insurance premium. Homes that are less than 5 miles away from a fire department will pay less for their premium. As long as there's a fire hydrant within 1,000 feet of the house, that gives the fire department something to hook up to. The age of the home is also going to impact the premium. If a home's over 20 years old, it may require a special inspection, and there may be less companies willing to insure. Less than 20 years old, there's more companies available, and they'll also charge a lower premium.